Hello, everyone. I'm Joseph Jaraputo, the founder and editorial director of Global Finance. Today I'll talk with Melvin Lowe, the managing director and head of global transaction banking at OCBC Bank Group, responsible for SMEs, large corporations, financial institutions, and government entities. The Singapore-based bank is also among the region's most innovative. Its industry-leading customizable transaction banking products and services give companies of different sizes greater control of cash flow, payments, and collections.
Thanks very much for the question. And indeed, collections is really at the heart of what our businesses, our customers, the companies, and the corporates and the multinationals are all looking to do much better in. One of the things that has been part of the industry initiatives that has pushed this forward is instant payments, as we all know. 24/7 instant payments have created new ways in which companies can collect from their customers on a 24/7 basis. And that has spawned all kinds of innovations in this space. I want to talk a little bit about QRs because the QR code, especially in this part of the world, has been really proliferating at a pace that is breathtaking. With instant payments on the back of it, we tokenize the bank accounts of customers, put them onto a QR code so that their customers can pay them through instant payment using their mobile phones. And then that has really spawned a whole series of innovations that we've seen. Our QR codes are now seen everywhere, over the counter, at retail and F&B outlets, embedded into the point of sale systems, put onto invoices, both physical and digital, and really on mobile platforms and online platforms in our e-commerce or e-commerce apps or e-commerce internet offerings. All of this is to facilitate the settlement of collections for these corporates. And in OCBC, we've actually taken that very seriously. Our One Collect platform, a mobile app that is available for businesses and companies to use, has our QR codes embedded inside so that they can generate the QR codes on the fly with the amounts and the reference numbers inside so that their customers can make the payment instantly and then have that information that they need to reconcile at the back when they receive the payment information through their bank statements or through any form of MT940 or electronic statement integration with the bank. Our One Collect, which we are very proud to roll out in Singapore and across the region in our core markets, warehouses not just the domestic QR codes, right, but many other QR codes, which I'll talk to a little bit briefly. The second phase that actually has proliferated is the concept of cross-border payments, right? The cross-border collections came about because the instant payments went cross-border. And so you could pay from Singapore to Thailand, which was the first of its kind, the instant payments. And now you've got a whole proliferation of bilateral relationships between Malaysia, Thailand, Indonesia, Singapore, and then soon to be Philippines, Vietnam, etc. in Southeast Asia. Because of this proliferation of cross-border payments, the cross-border QR has latched onto that and also started to become more prevalent. So what you're seeing is a proliferation of QRs that visitors from overseas coming into your country can actually scan at the local merchants and get their payments done and get their goods and services. Two examples will be the big fintechs, Alipay and WeChat. And they have been busy on their own building that QR framework across Southeast Asia and the rest of the world. We have embedded Ali and WeChat QRs into our One Collect platform, for example. The second area is in G2G, government-to-government QR interoperability discussions, where Singapore and Malaysia, Thailand and Malaysia, or Indonesia and Singapore have worked out a way for banks in one country to scan the QRs, the domestic QRs of another country, and then for the payments to go across. And this government-to-government interoperability provides a lot of flexibility for citizens of those countries to pay in the other country when they go and travel, right? And as markets have opened up in tourism, this has been a big boom. The last thing on interoperable QR is happening in Singapore. And that's where in our hawker centers, the food stalls where you can buy your basic food, you can actually pay in a multitude of QRs through a single QR, an interoperable QR called the SGQR Plus. And this SGQR Plus is a repository of many QRs, as many as 20 over QRs in there, where you can just open up one of those 20 apps and scan it. An interesting anecdote that I just heard about was a colleague of mine from Malaysia came over and he wasn't sure whether he could buy his local food from the local vendor. But when he whipped out his app and scanned that interoperable QR, he was able to do so. It is this kind of convenience that we are seeing being proliferated in the industry. And it's really creating a lot of use cases. Our One Collect reposits all of these, right? The Alipay and WeChat, as I mentioned, but also the domestic QRs, like the Do It Now QR cross-border, both Pay Now in Malaysia and Do It Now in Singapore, and as well as supporting the SGQR Plus that is out in Singapore. The second area that I wanted to talk about in this question that's interesting is really the enhancements of the virtual account. Virtual accounts have been around for a long time, 20 over years, right? And they were used primarily by companies to reconcile their collections when their customers would pay them to their bank account. Because if they receive an incoming transaction into their bank account, a digital transaction, electronic transaction, they wouldn't be able to know who paid it. So virtual accounts were devised so that they could give these tokenized account numbers specific to the payer, the buyer, so that when they paid to these accounts, it will go to the master account, but the reference number of the virtual account will appear in the statement. This has been around for a couple of decades now, so it's not new. But what we're seeing in the proliferation or the enhancements of the virtual account is that the virtual accounts can also be tokenized into a QR so that the use cases of over-the-counter POS and invoices can be extended even to this mode of solution, the basic solution of virtual accounts. We're also seeing how virtual accounts are being expanded into payments. So we've launched our virtual account payments first in the market, where payments go out of the virtual account and are able to be controlled through our electronic banking platform, Velocity. And having virtual accounts do both collections and payments actually creates a new form of account management control for the company. In other words, they can segregate funds coming in and out for different projects or different divisions or different subsidiaries without having to open a multitude of accounts to handle those things. The concept of virtual account payments is fairly recent. And then when you overlay things like form factors like QR to enable mobile transactions to occur through scan and pay, etc., actually creates a lot of use cases for our clients. And lastly, I'm just going to talk very briefly, because this is not about that topic, but I'm just going to talk a little bit about digital currencies. In the space of tokenization, where virtual accounts are really the tokenization of the real bank account, and especially when payments are added, new technologies, new infrastructures, DLT infrastructures can be used to actually further the virtual account value proposition, right? So with digital currencies, and it's a fairly new space, but in digital currencies, we are able to mint, right, the value of funds into a digital coin that has the exact properties, the same properties as a virtual account for collections and payments. Again, this has broad-ranging usability. We have done a POC pilot, not just a POC, but a pilot with a government agency for doing project payments to their vendors, their contractors, and using the digital coin, the digital currency, and infusing smart contracts that actually make it a conditional payment. As we were talking about it, the blockchain platforms that are proliferating through DLT provide great opportunities for us to leverage them to produce all of these products and services for our corporates in payments and collection space. And APIs play a very, very critical role. At OCBC, we have made all our standard transaction banking products and services availed through APIs. In fact, our own Velocity platform is built primarily through APIs, a collection of APIs that are orchestrated together, known as microservices. And so no matter whether the client wants to connect to us in first party through Velocity or whether through their platform, through APIs, we are able to support the provision of those banking services to them through this means. What this actually means is that we're able to connect platforms together in a way that we've never been able to do before. For example, in the old days, you will have to have a very heavy main ERP platform that you've implemented in order to connect yourselves to the bank. Tomorrow, you could have a very light blockchain DLT backed infrastructure that can actually use APIs to connect to the banks in a very simple way. You could be on a platform, a third-party platform, and be able to be availed of the banking services that you have if you dealt directly with the bank through their electronic banking, but having it on your third-party platform. And I think that this would actually be a big game changer in the space of payments and collections, because it would allow our customers to reach us in ways that they've never done so before. I actually think that the main benefits for this particular kind of solutions, first of all, are in the cost, right? The cost of actually delivering out these platforms would be far lower than in the old days, where we had to have these very heavy back-end systems doing host-to-host connections. DLT is widely available. There are many vendors out there, and any company of any size can jump onto that relatively easily. The main thing is that the connectivity, right, between those platforms and the bank are all available today. Yeah, and they're available through the APIs that I mentioned. The second is really about liquidity. I believe that the most important thing about optimizing your payments and collections is ensuring that your working capital is being generated and released from the supply chains and the channels that they are using to deal with their customers and their suppliers. Managing their order to cash and the procure to pay in the most efficient way releases working capital and hence liquidity for the company to do their expansions, capex, or even invest in other companies. Having this liquidity is extremely critical, and it's kind of like the holy grail of what companies need to do and what the treasurer's most important job is. And I think that these technologies allow for the release of the working capital through the technologies that they provide. I also believe that that the benefit really is what we're seeing is a democratization of the solutions that will be given to the big companies for the small companies. And here the benefits will arise to these small companies to be able to use some of the most fancy solutions that were only available to multinationals some 10, 20 years ago. And these companies, through the more cost-effective technologies and the more efficient technologies, are able to actually get the liquidity benefits, the digital benefits, the automation, and the processing efficiencies that a large multinational would have. And this democratization would change the world. It would change the way in which companies can scale, can grow, and can interact more digitally with their counterparties. So it's really an exciting time to be in this space.